Wrong camera.
Hello.
Hello.
How are you today?
I'm great. How about you?
I am a little tired. Got up super early and had to fly to Denver and just showed up to this office. We're going to build out a whole office. So anyway, it's going to be a fun day.
That's good.
Yeah.
I guess I'll put it back up.
There we go.
I was gonna switch it to my other one, but I have to turn the camera on at the last minute so it doesn't.
Timeout. Yeah.
I gotta figure that out. I gotta get a fan.
Yeah. Um, well, this is sucks that I'm going to miss Dan's show too. I guess I don't get much Angela vitamin A this week.
No.
It's good to see you though. I miss you.
Yeah, it's good to see you.
See,
Dan doesn't even send out a text. Do you forget that he has his own show? Gosh.
Dan, I know he's Space Case. Do you have that link that I sent you for people to sign in with?
Yep.
So I emailed it to you. Okay. All right. Just have the people fill that out so we know who showed up.
Already put it in the chat.
Cool.
Hey, did you make me the host?
I did. I made you the co-host. So when I leave,
Cool.
I'll just assign you as host.
Okay. Awesome.
Cool. You excited?
I am.
Nice.
I have Dan. So Dan just, it's going to be like a Dan show.
Yeah, a Dan show. Who's on your, I thought I saw you had somebody on today.
Pat Clark.
That's right. That's exciting, huh?
So I have an easy day. I have an easy day. I got people bringing the energy and I just get to sit back and I literally prepared nothing with Pat because he's a character. So
that's cool. It sucks. Like we were at RoofCon in Florida and Pat came up to talk to me and I didn't recognize him. And I was right in the middle of talking with a potential customer,
Oh yeah.
And I wanted to give him some attention. He's a customer of Collaborates too. And I wanted to talk to him, but the customer I was talking to was just one of those talking forever, right? And then Pat walked off and I didn't get to really talk to him or hang out with him much. I was like, oh, that sucks. But I'm sure it'll come back around someday.
Yeah. I hadn't met him until
Vegas, right?
Vegas. And then I met him in Vegas and he's like, you should come to Sales Boost. And I was like, well, I thought about it. It's just to see Dan and Michael. And then I show up.
How's the JC train going?
That's going good.
Nice.
Yeah.
I'm happy for you.
It's going good. He's just so attentive and so praising. And so
that's nice. That's
nice.
nice.
So yeah, I leave next week. And it's just amazing how I got to be on Martha and I was on Martha Megan, that podcast yesterday morning.
Yeah.
So it's just how different things align, right? If I wouldn't have hung out with JC, I wouldn't have gone to Sales Boost and all the connections I made at Sales Boost and spending time with Kurt and Rachel and none of that would have happened. And then he already booked my trip to New Orleans to go to Martha's thing.
Cool.
Which was awesome. But then they asked me on the podcast after that, and then they invited me to New Orleans, so I'm already coming.
Cool.
So
I spoke with Dave from Canada yesterday. He was on the phone with me. Did I tell you him and I have the same birthday?
Yes, you did.
That's kind of cool, huh? All right. Well, I'll leave and assign you as host. Thank you so much for running this today.
And I'm giving away a flight, right? Somebody
free round trip to Phoenix.
Okay.
Yeah. Have fun with it.
Okay.
All right. Bye.
Switch up my cameras. Oh.
What's happening?
Hello.
I need to choose a virtual background. Oh, this one looks familiar.
Oh.
That's cool. I'm in the bar. It's cool.
It's gonna be a fun day. I'm like, I get to sit back and relax. I had Pat on my show last. And sometimes when you have guests, you got to gear up, like you might have to.
Mm-hmm. You got to bring everything. You got to bring everything the whole show.
Yes. And normally Collaborate Live, it's just me presenting, trying to be presenty, and then leading a Q&A. And so it's a lot of energy, just me. Now I'm like, I just get to sit back and let Dan do the show.
Oh, dang. That sounds like a lot of pressure.
So you can just talk about whatever you want. I mean, we'll just, you and I banter, whatever, but say whatever you want, and then we'll do lots of Q&A.
I like it. Is Dave coming on, or does Dave not come on Collaborate Live?
Dave is not on Collaborate Live today.
It's not even on his own show.
He's in Denver, so he's not on. But guess what? We get to give away a free flight today.
Oh yeah. Hell yeah. I like giving stuff away. I'm all about giving stuff away.
So
and we can talk shit, and we can talk shit about Dave. He can't be here to defend himself.
We can't. I gotta make sure and record, but he's quite the visionary. He's I'm like, do you have a plan to pay for all this?
Yeah, good point. Total visionary.
Anyway. All right, we're gonna let you have not sent a text about your own show. You might just have me. I grabbed my phone. I was like, shit, I better quick send a note out to everybody that we're doing the show today. I was like, we both already put it out there that there's a show, so you don't have a choice. Okay, we'll let everybody in.
Cool. It's a party.
It is a party, but we should have it. Hello, everyone. We should have entrance music. We need some Collaborate Live entrance music. I need to mark that down.
We totally should. Look at these guys. I see Nick Thurston's biceps over there, I think. Those are in the house. Yeah, it's in the house. What's up, Zig? What's up, Anthony? Hey, Campbell's in the house. I see Noah Blair's on. What is up?
Hello.
What's going on, Mr. Platta?
Yo, dude, you're not gonna like rip that seatbelt with all those muscles, are you? That seatbelt might just like blow off, and then you're gonna have a safety concern.
Oh, stop.
Someday. I did push-ups today. During my workout. So nice. You can be proud. Yeah.
Hey, I can't. It's better than me. I didn't work out yet today, so.
When you work out and then your muscles are so sore that they don't work anymore. On my last call that I had right before this, I was like trying to move my mouse around, but it just didn't want to go where I wanted it to. I was like shaky. Like, oh man.
That's how you know you got a good one.
All right. Keep working out.
I'll pop my head in.
The shakes.
As I'm on the phone.
Not to be confused with the shake weights. I didn't use my shake weights today. I kept the shake weights in the closet for today. That's tomorrow's workout.
That'd have been too much in one day.
Yeah.
Oh goodness. All right, we'll wait just a little bit, getting everybody on, but way to be on today. If you guys didn't see, we are giving away a free round trip plane ticket to Phoenix for the event for someone that's on live today.
How do I put this Anthony Sanz guy on mute so I don't have to listen to him chew his lunch. If he was drinking a beer, I'd be more interested. Somebody's got a lot. There he's got it. It was his background noise. I'm just calling you out, Anthony, because I know you can take it. Usually when Angela's on my show, she gets this weird like echo, and like I think she does it on purpose just to throw me off. So I'm used to it.
I don't know what that is, but it is usually me.
Nobody knows.
Nobody knows the mystery of the echoing microphone.
That's what happens when they give business owners shows. None of us actually know how to do a show. You should have seen. I tried to do a podcast with Scott. We had to redo the whole damn thing.
Or run the technology. Yeah, we don't know how to run a show.
No, it's not our job.
When I first got mine, I was terrified of the commercials. Like, oh, how am I going to figure out how to run the music every single week?
It's impossible. So we get to give away $25,000 today, right? That's what we're doing.
Not the 25 grand.
Oh, damn it.
The plane ticket. So
wait. Do we get points? Do we get points for being on this?
Yes.
And do I get a point? Even though I was like invited, do I still get a point?
You should. We're just going to give you bonus points for presenting.
Oh, cool.
You should get some.
Yeah.
So mentioning points for the $25,000 giveaway, if you weren't on last week, we announced the details of that. I'm probably supposed to screen share and share the leaderboard, but like Dan said, that's just a lot. I don't want to do all the things to do that. So check though. I'll post the link and the leaderboard up in the Facebook group so that you can see it there. There is in the chat box. If you look in the chat box, I posted the form. Every week when you're on, we need you to fill that form out. It not only lets us know that you're here. Did it record when I hit recording?
It is recording.
Okay, good.
Good job.
So fill that form out. If you invited somebody to be here with you today, you get points for inviting people. So that's easy points every week. You also get points when you share the link or anything about Collaborate Live on social media or comment on anything that we post on social media. There's nothing in the chat box. It's
chat box is empty.
It says it's to everyone right above yours. You don't see it? I'll post it again.
Can't see it. What is there a website link to going and looking at the scoreboard thing?
Yep, there is. Who else on the team is on here? Is Karen on? Andy, if Karen hops on here, could you get her to post in the chat for me the website link for the leaderboard?
Yeah, she won't be on today.
She won't? Is Travis or anyone on?
I would do it. I just don't know what the website is.
I'll find it. Gels is on. Gels is on our team. Gels, can you get to the Collaborate Live website and post it in the chat? Then everyone can see the leaderboard. That would be awesome. Okay, well, we're going to get started with some, back to the numbers thing. So fill out that thing, invite a guest, comment on all the social media posts. You guys saw some people have surprised seeing me in the wild. I was surprised.
Out in Mother Nature. In the wilderness.
We called it the wild, but it was really exciting. I made a last minute trip to South Carolina because I just couldn't wait to spend time with Dan in person to sales boost. But some of the Collaborate Live, some of our clients that I hadn't met came up to me and legitimately found me, didn't know me, found me in the wild, took a picture and got some points. So you can do that too.
Oh yeah.
All right, Dan. I said I was so excited to have Dan on because he brings the energy and I don't have to do anything. So Dan's going to talk to us about numbers and all the things. Dan makes bookkeeping look fun, sexy, not boring.
I don't just make it look that way. I make it that way.
Oh, you make it that way.
That's a bold claim. No, that's maybe too far. Oh, well.
So I'm going to let you take it away. Tell us anything you want. And then we're going to have lots of, I know many of you on this call were excited to do lots of Q&A, and we're going to have the opportunity to do that with Dan too. So Dan, take it away, whichever way you are on the screen.
Yeah. I think you pointed the right direction as far as I'm concerned, based on where my bubble's at.
There we go.
I do think it's funny when I go on a show because I am like, oh crap, I'm host like Zig Scott from ProTech is on. He has an outdoors podcast, and I came on and I was like, okay, let me just take over hosting this thing for 1 second here because I got a question that I want to ask myself. So it's weird when you're like a show host, you just feel like you're an asshole of a guest because you just start taking over the show by accident, but then kind of intentionally. So
Dan, I think you did great. Just so you know.
But I mean, like, therefore, Angela, to your point, I do make it easy, or maybe it's totally overstepping and annoying.
Nope.
But hey,
I like to make it easy.
I ain't changing. So my like whatever Q&A I want to get to that. I think that's the priority. So I'll keep my little message short and sweet. But my big thing for anybody from a bookkeeping standpoint, if you've ever heard me talk, you've already heard this before, so I'm just a broken record. But bookkeeping is not an accounting thing; it's a finance thing. And as you scale your business, yeah, bookkeeping helps you pay your taxes, and that's pretty neat. But when you're scaling a business, I don't care if you're pressure washing or landscaping or picking up dog shit. When you're scaling your business, you're just in the business of making decisions. It's not about what you do. It's about why you do it and how you do it. And knowing which decisions are working and which ones aren't working tells you what you need to do more of and tells you what you need to do less of. And at some point, your gut fails and you need data to help you make those decisions. Now, your gut is still going to be right a lot of the time, but when you're doing 100,000 in revenue, you see everything in the business. Your gut is a super reliable source for data. When you're doing 300,000 to 400,000, it gets a little bit less reliable because now you got some team members and you got another truck running around out there, whatever the case is. And so you question your gut a little bit more. When you're doing 1 million, you have no idea what's going on. You have a bunch of other people spending your money. And so you got to see where it's landing, right? Bookkeeping, yeah, it helps keep track of it all. And so at the end of the year, it's easier to do your taxes and make sure that part of it's right. But that's like boring, nerdy accounting stuff. The sexy part of bookkeeping is that, again, you're not in the business of what it is that you do. You're in the business of making decisions to make that thing more profitable. And without good data, you can't make good decisions. So the bookkeeping is the thing that drives the report card for you to know where you're winning and where you're losing and help you make those decisions. And so a couple things. One is the timeliness of when you do it becomes really important for that. And who you have do it becomes really important for that. And this is just my little pitch because I run into a lot of business owners who have their CPA doing their books, right? But the CPA doesn't do your bookkeeping for you. They do it for themselves. They're not trying to give you better information to help you run your business better. They're trying to organize your information to get your taxes done. And they're trying to save themselves time later. Their number one goal isn't, how can I help Anthony make more money and know what's going on in his business? Their number one goal is, how can I make sure when I have to do Anthony's taxes that it's like totally dialed in and it's as easy as possible? In general, not all CPAs ever, but in general, that's what their mindset is. A good bookkeeper should be thinking about, when do you need the data? How often do you need it? And how do you need it organized to help you make decisions? And we got to make sure it's reconciled so your darn CPA can do taxes with it. But that's like an afterthought. The point of it is, how can we help you run your business better, faster, more organized, so you're putting more money into the right things and sucking money out of the wrong things? From a timeliness standpoint, to do all of that, to me, weekly bookkeeping is super, super important. And weekly might seem like overkill, but it's important for 3 reasons. One is, the sooner the data, the better. If your bookkeeper is doing stuff once a month or once a quarter, and you go into your QuickBooks and look at it, which you should be to see how you're doing, you're looking at old data. The older the data, the less relevant it is to you. So the more recent the data, the more relevant it is to you. So weekly is important for that, so that your data is always relevant. The second reason why weekly is really important is if your bookkeeper is asking you a question, is Brock tuning in from the darn pool on us? Like, how's he going to do that to us? I'm surprised he's not like hiding behind a big cocktail. He's got a big cocktail going or something. Like, what's up, man?
Cocktail bar's not open for another hour. I'm kind of pissed about that.
Good luck. But weekly is also really important because if your bookkeeper is asking you a question about the $300 you spent on Amazon last week, that's a pretty easy answer. Oh yeah, it was this and this and this. If a bookkeeper asks you about $300 you spent on Amazon last month, you're like, well, I don't know. Like, I think if it was the one at the beginning of the month or at the middle of the month or the end of the month, and I think I bought this, but then I think I returned that, so it might have been this, right? And then you're like, oh shit, let me go look, right? And so now all of a sudden it's taking you more time. And a big reason why you delegate anything is so that it doesn't take you more time. So weekly is really important because it just, that back and forth is a lot faster. The last reason why I like to do stuff weekly is purely from a communication standpoint. We get a lot of clients that come from other bookkeeping companies. And out of hundreds of them, I have yet to get one where they said, maybe there's one or two. But very, very rarely do I get a bookkeeping client from another bookkeeping company where they're like, they just didn't know how to do journal entries and debits and credits and, run a P&L. It's like, no, that like the nerdy accountants knew how to do nerdy accounting stuff. The problem always forever is that they don't know how to communicate it. And so by doing stuff weekly, the communication is always on point. Your bookkeeper should literally be checking in with you every single week with questions, but also with yo, Anthony, got your books done for the week. Here's this, here's that. Let me know if you need anything else from me. It's a communication game. Hurt from Responsibit always said with his window cleaning company, he's like, we're a customer service business that happens to clean windows. And that's in bookkeeping is just that. It's a communication business that just happens to keep your finances up for you, because the bookkeeping isn't the thing that makes or breaks the bookkeeping. The communication is the thing that makes or breaks the bookkeeping. So make sure in your financial system that you have everything organized so that it's useful, but also that it's getting done soon enough and recurring enough that the data is relevant to you. I think everybody probably already knows this, but if you don't, I'll say it anyway. If you're on this call, you're probably at the point where you should be taxed as an S Corp and not just an LLC taxed as a sole proprietor. And that'll save you thousands of dollars on your payroll taxes. And it forces you to go on payroll, make sure you take a check, make sure you account for your own cost in the business. And I see a lot of guys that are like in this process of, like the startup scale up early on, a couple $100,000, where they don't put themselves on payroll. They think they're super profitable. And then they start hiring other people. And then all of a sudden all the money's gone. And they're like, oh crap, I tried to like scale up and there's no money left. And it's generally because they never paid themselves. So they thought they were making all this profit, but in reality, they were just making a paycheck. And then they hired somebody else to do the job that they were making the paycheck for. And the minute they hired somebody else and had to pay them that paycheck, there's no paycheck left. That guy's getting the paycheck. When you put yourself on payroll, A, as an S Corp, you save money on payroll taxes. B, you make sure that you account for yourself and your labor. And that comes in handy since you're the most damn expensive person in the company, or at least you should be. And so knowing how much you cost and what it's going to cost to replace yourself becomes really handy as you start to scale the business. And that way you can be sitting in a pool having a cocktail with Brock, because your business is scaled and you don't need to be there all day, every day. Two caveats to that. One is don't start an S Corp. Turn your LLC into being taxed as an S Corp. Starting an S Corp sucks because then you get like a new FEIN and you got to have a board of directors and meeting minutes and just a bunch of bureaucratic bullshit that's not necessary for most of us. I know I have an S Corp and it sucks, but it's like a holding company thing. In general, if it's just an LLC or two, just have them taxed as an S Corp. There's an IRS form 2553 to be able to do that. And then you get the benefits of an S Corp without having to be an S Corp. When you do that, you need to take a reasonable wage. Leave it to the IRS to nail down the specifics. You have to take a reasonable wage. And when you take a reasonable wage, you're paying yourself for the job that you're doing in your business based on the revenue and the profitability of the business. Now, only that wage gets payroll taxed. So let's say you're going to take $50,000 of income out of the business this year. You would maybe take like a $30,000 paycheck and then take 20,000 of distributions. Only the $30,000 paycheck you took would get payroll taxed, not the other distributions. Whereas if you're just an LLC taxed as a sole proprietor and the net income is 50,000, you're paying taxes on all 50,000, both payroll and income taxes. At least being taxed as an S corp, you get to save some of the payroll taxes. That's not necessarily advice for everybody. Like I said, most people are probably already doing that that are on this call. If you're not, if you are, that's why you're doing it. Because I run into a lot of people that are like, yeah, I'm taxed as an S corp. I don't know why. Just something my CPA had me do. But that's why it just saves you a bunch of money in payroll taxes. As long as you pay yourself a little bit lower wage and more in distributions, that's generally the way to do it, as long as it's a reasonable wage. Trying to think if there's anything else I can rant at you guys about that comes to mind. Angela, anything specifically you're like, Dan, hit him with this?
I love how you started it with the communication of that it's not about the accounting. So many people think of it in the negative aspect and way, me included, because you don't want to look at your numbers, you think of it as accounting or even the word bookkeeping, but it is the knowledge that empowers you to make those decisions. Like you said, you're scaling the business and you need to know one decision after another, and you need to have that knowledge, that report card in front of you to make those decisions. And if you can kind of switch your mindset, I think that's what blocks a lot of leaders from business owners from scaling, is they're not willing to look at their numbers consistently.
Yep. They're scary, so we hide from them because
exactly. Instead of shifting your mindset on that, and this is how I make the next best decision.
Yep.
This is how I figure out the profitability and, figure out the game. This is how I play the game. I love when you talk about the layers of, I don't know, it's just one of my favorite things when I hear you present on it, of as you scale a business, making the decisions and going through the stages of purgatory.
Oh God, the purgatory.
That could be a long thing, but you could.
Yeah. I want to hit the purgatories because everybody's usually at one of them. We get through the growth periods pretty fast. We all get stuck in the purgatory, so most of us are probably in one of them. The other things that I was thinking that are probably relevant right now are buying equipment and trucks and stuff like that, because we're all like trying to figure out all the assets that we need for the springtime, and just like how many people to have on a truck and how to think about that, like what size of teams do we need to be most efficient. So I'll hit those quick, and then I'll hit the purgatory stuff. So in general, with buying equipment and trucks and stuff like that, the worst thing you can possibly do is pay for them cash. And that goes against a lot of our like ego-based mindsets of like a small business owner, where we're like, we want to kind of beat our chest a little bit. And you'll see dudes on social media all the time be like, this is my sweet rig, bought it cash. And it just totally screws us over, because our assets don't make shit for money unless we have a good person and a good customer to go run them. Like that is neato if you're the only one in the business. But last time I checked, if you're going to scale a home service business, you're going to have mostly 20-year-old dudes that don't know how to back a trailer up. Like that's our workforce, right? So trailers usually aren't scalable. Unless you live in like a really good fishing town and every kid grew up backing a boat in. I did. So that would work where I'm from. But with the equipment and the trucks, don't buy it, but don't pay cash for them, because you need that cash flow to spend on marketing and recruiting to go get employees and go get customers, so that truck can actually go out and make some money, and that equipment can actually go out and make some money. It's okay to have debt on that stuff. Now, within reason, right? You don't want to leverage and finance everything to the point like you can't even make the monthly payments on it. Your eyes got to be the right size for your stomach. And you don't want to go finance stuff at like 15 or 20% interest rates. You want to finance stuff at 5 to 10% interest rates, because every point of interest that you start going over that is just like money out of your pocket, right? And so that's all dependent on what bank you use and what your credit looks like and all that stuff. But at some point, if the rate's too high, it doesn't make it worth it anymore, right? If you can get something for under 10% as a business owner, now, like this is not in your personal life. I wouldn't go take out a vehicle loan on a personal vehicle at 10%. That'd be stupid. Personally, your vehicle doesn't make you any fucking money. In the business, can I swear on this show, Angela? I kind of back for dropping F-bombs. So yeah. So but in your business, like that asset makes you money, right? You got to have the marketing and the recruiting to do it. But even if it's a 10% note on that vehicle, if you can save 20 grand and go spend half of it on marketing and half of it on recruiting, you're going to guarantee that you have a phenomenal employee in that truck and that truck is busy. And now that truck can make you some money. And now that those payments are going to be easy to make because that truck is out there printing money every day. But if you spent all 50 grand on that truck, there ain't no money left for the marketing and recruiting to fill that truck up. In general, for our businesses, we try to put about 30% down on an asset like that. So we make sure that we don't buy shit that we can't afford, because that is a risk too. If you're like fully financing everything, it usually tells you like maybe it's not the right time yet, or we don't have enough money to actually buy that thing. Because I do see guys going broke buying equipment for everything because that shit's expensive and then it sits. And if you're going to buy equipment, like it needs to get used 80% of your jobs, just like if you ran a manufacturing warehouse and you had equipment on the floor, like 80% utilization is the target rate. If you're over that, usually there's no time for repairs and maintenance. If you're under that, you're losing money. Same with our assets. If you're buying stuff and it's parked, you need to sell it. Like it's not being used enough. So like focus on the shit that you're using all the time. But we put 30% down on it because we never want to buy something we can't afford. And we never want to get upside down on that thing. If you get upside down on a vehicle, like anything, house, vehicle, equipment, it sucks. You have no choices. You just have to keep eating a payment on a thing you can't afford. And many of us have probably been there, myself included. That's a shitty feeling when you have no options. And so our 30% down strategy is literally just to avoid the suck. We need to make sure we don't put ourselves in there. That way, even if like the thing gets totaled, your insurance payout's going to cover the fact that like you'll never be upside down on it. It'll never cost you money again. So like it alleviates a ton of stress so you can focus on things that are way more fun and way more profitable. The other piece of the equipment thing is like, don't go buy equipment for a one-off job because it's a shiny object. That's where I see guys get in trouble, is they end up going down all these different paths and they buy super expensive equipment that couldn't possibly pay for itself, but it was a justification for a shiny new toy to go get a job. But it's not a job that they're going to keep doing. That equipment will never be at like 80% utilization. And if it's not at around 80% utilization, it probably just means that's not a business you should be in. You need to like scale back so that those assets are being used almost every day. 4 out of 5 days, that asset should be out in the field being used. And if it's not, then it's a waste of money. It's probably not paying for itself. And so just making sure your equipment is being productive and making you money, and therefore that you have enough money left over to go get more customers for that equipment to go to and go get more awesome dudes for that can use that equipment. The last part of that would be on the dude side of it or the gal side of it. I'm not trying to be sexist, Angela. I just say dudes because I'm a bro dude.
It's all inclusive.
Yeah. It actually, the term dudes is very inclusive now. I feel like it's just a kind of for everybody. But I'm biased. I have a recruiting business. And so I am naturally willing to pay way more for employees than most people. But holy shit. And I think you guys have probably all been there. When you have an A-player employee, you would pay $5,000 for another one. Hands down. If you wouldn't, I'd tell you to get the hell out of this group because you're wasting your time and your mindset isn't right. If you're not willing to pay $5,000 for the best employee you ever had, I don't know what kind of business you're in, but you ain't the ones I'm in, because employees are freaking gold. If you can guarantee me a great employee, yet we spend like $500 on boosting job ads and we're like, oh man, nobody out there wants to work. It's like I presented on it down at Sales Boost, and Sean Day, who's our recruiting director and goes on Turfs Up with me a lot, he'll be on today actually. He always says, that person sitting across from you at the interview table is the biggest sale of your life. Pretty much every time they're there. They're worth $150,000 to $200,000 of revenue generally, compared to our average client that's worth like a couple grand a year, maybe. And yet we're like hardly willing to spend money on them. And we kind of treat them like they owe us instead of us owing them. And if we flip that mindset based on the fact that they're literally worth hundreds of thousands of dollars, it makes it really clear, like that's the thing we should invest in, whether it's the recruiting to find the right ones, because we've all had shitty employees. It sucks. It's not it. Again, if I could just pay you $5,000 and you would give me a great employee, I'd be like, yep. Like I don't have to go through the bullshit of a shitty employee, because I'd pay $5,000 to not have the wrong employee. Like it sucks. It sucks having shitty employees. And then we like drag them along and we try to make them work and we justify them. And then eventually they quit or we fire them because they're a shitty employee. And it's just because we were too cheap on the front end. So don't get caught spending all your money on equipment and not having the money to invest in good employees, because if you have a good employee, you hardly need equipment. They'll just figure out how to go make money because they're a good employee. Like they don't all have to suck. You just need to go compete in that recruiting space. And the other thing I find is if you have really good employees, it makes getting customers a lot easier, because you get a shitload more referrals when you have really good employees, and a really good employees out there like selling the neighbor too, just because they're a nice human. Right. So back to the equipment side of it, don't sink all your money into equipment. The equipment doesn't make you any money. In order for you to scale, you need good employees and good customers. And so make sure you save enough money to spend on those things. And then it makes if you have 6 months of work booked out, then go buy whatever equipment you need to go do. Like the work should pay for the equipment, not buy the equipment and hope that you can find enough work for that equipment to do. Book the work out and then buy the equipment. The last little thing I'd say before I hit on purgatories is, in general, the less people you have on the vehicle, the more profitable it is and the more productive it is. That's a little different for different industries, but nothing kills productivity like a bunch of folks in a vehicle driving between jobs. It just eats up productivity. And we found that like this became really clear in our maid service business that we used to have. But it applies to window cleaning, pressure washing, landscaping, anything. Now, like for safety reasons and for like productivity or like ability to even get a job done, sometimes you need X amount of people on a job just to even make it make sense. But I'll give you the example of maid service because it became so clear when I mathed this out. We used to have our maids go do 4 houses a day for a team of 2. And that was a full day. It would be about a $500 day for a team of 2. So about $250 per person of production. If you think about what their drive time looked like, so there's a productivity piece and a drive piece. I'll talk about the drive time piece first. 2 people in the car. They're at the office. 2 people go to job number 1. 2 people go to job number 2, and then to job 3, and then to job 4, and then back to the office. That's 5 drives between all those jobs and back to the office, but there's 2 people in the car. So it's really 10 drives because both of those people are not producing anything when they're in that car. If you split those 2 jobs up and said, you're going here and you're going to those 2, then each person's day looks like this. Now each person just has 2 jobs on their route, right? Team of 2 used to have 4. Now each person's individual. Now they both just have 2 jobs. They go from the office to job 1 to job 2, back to the office. They both have 3 drives. So what was 10 drives now is down to 6 drives. So you literally just increased your productivity like in between jobs by 40% That was it. All you did was like split them up. And so there's this drive time factor of the more people you have in a vehicle, the more productivity you're losing. And that's just like straight math. Now, routing can kind of go either way. Sometimes with more vehicles, routing gets a lot better because like, oh, with 2 people in the vehicle, they had to go to this side of town and then back to this side of town and then back to shop. Whereas if we split them up, they could just go boop, boop, and right back. And so they actually saved mileage on top of it, right? It doesn't always work like that. But if you draw out enough scenarios, usually there's a mileage benefit to it. But the other thing that we tended to see in our businesses, and this was whether it was maid service or window cleaning or anything, is the more people you have at the job, the more people are leaning up against somebody or are on their phone, right? There's always somebody sitting in the truck waiting, or this person can't do that thing until that person's done. And so two people if our good window cleaner can do $1,000 of production in a day, if we send him out with anybody, him and that other person, even if they both can do $1,000 in a day by themselves, at most they'll get like $1,700 done together. Part of it is the drive time. Part of it is they're naturally, one is usually waiting on the other, or just hey, did you do that side? I got to do this side. Okay, well, you're doing that. I'm gonna wait for you. And psychologically, it tends to be that one of them is always going to be a little bit faster, right? Rarely will you find two people that literally work at the exact same speed.
Mm-hmm.
And it will never be that the slower person speeds up and works as fast as the fastest person. It will always be that the fastest person will slow down to the pace that the slower person is going, because why the hell would they work faster and do more work if they're going to make the same amount of money while they're out there, right? And so generally, now there's plenty of reasons why we run solo crews, that can be intimidating for dudes too. And so there's some mental health issues with it that I found where like teams are kind of nice at like they can hang better mentally. So I'm not saying it's like for sure always run solo crews for everything, no matter what. But I think keep those productivity things in mind because they're so easy to overlook. But I think we all know when you put two guys in a truck, there's no way they do twice as much as two trucks with one guy each. Now, keep in mind, like two trucks also cost more money than one truck. So there's like a capital investment to make it happen. It's hard to do if your rigs cost $70,000. Ours, we try to get around 20 to 30. And so then it's a little easier to run them solo. And never discount the drive time of piling a bunch of people in a vehicle because it just eats productivity for lunch. Nobody's making money when they're driving around in a vehicle. And the more people you put in that vehicle, the less money you're making. Math.
That is some good math. That's another thing, like you said, if you're not willing to look at your numbers and willing to have conversations about those, you might think it goes the other way without looking at that. Like, oh, surely this is more productive. Surely this is efficient, unless you're looking at the numbers.
It's all about them numbers.
All about the numbers.
Just a decision-making game. We got like, 25 minutes left. I can talk purgatories, but I'd talk purgatories and we'd be here until my show starts.
I know. We'll have, maybe that's what I was just thinking. We probably have a lot of Q&As. So let's do Q&A and we can bring you on again for purgatory. Cause it's just, the way you explain it and talk about it.
I forgot that I did that talk when we were in Omaha. That is one of my favorite ones. That might be. So when we were at Sales Boost, Michael Gregory from Click Call Sell was sitting in the back taking stats on my talk. And the stats he took was how many F-bombs I dropped and then how many times I said shit. But I think when I gave the purgatory chat, like it probably was a record number of F-bombs. Naturally, it's conducive to a lot of F-bombs in that talk.
It is.
It just is. It just is.
So we'll bring Dan back on for that because it makes a ton of sense and it really goes through the emotions that you're feeling as a business owner as you're scaling and what that feels like and why you feel that way. And I feel like hope that you're going to get to the other side. So stay tuned for that one. But now we're going to open it up. So ask Dan some questions. Fire away. Antonio, I see that you joined us. I got to see Antonio at Sales Boost. Spotted me in the wild.
Wow.
Who's got some questions?
What's your feeling on leasing vehicles over buying vehicles?
This is not math based. This is personal. Math based, it can work either way. And truly it's like it's an equation you could run every time you look at the alternatives. I tend to like buying versus leasing because I know that I'm going to hire a 20-year-old kid with a Dewey, probably. Like, and I'm not going to be able to, my insurance is not going to want to cover them. And especially in like a leased vehicle, my insurance would be off the charts for some of the guys that we hire. And they're great at cleaning windows and pressure washing, but They can't date my daughters, that's for sure. But if I've got a 12-year-old transit van where the heat doesn't work in it anymore and the windows don't even go up and down anymore, they're getting that van. And that's the one they get to drive. And then I can get a progressive policy on that. So I prefer to own vehicles because I want a fleet. Like we have 15 vehicles in Minneapolis. Yeah, we got some new ones and we got some really old ones, and they all play a role, right? Like I want to have a spread. Obviously, the old ones need some more repairs and maintenance. The new ones are going to have payments on them. Mathematically, that ends up being like a wash over time. You can argue it either way. It's
Right.
hard to argue because it's all it depends. But I prefer to own so that I can have like a spectrum of aging vehicles. And then it gives me a little bit of like seniority opportunities to, if somebody's acting a fool, be like, you lose privilege to the 2020 Transit and you're going in the 2012 where, you know, that one tire has the shimmy. So you can kind of use it to save a few bucks, I think.
Okay.
Who else has a question?
I just covered everything so good. There's nothing left, Angela.
You did cover everything so well, but I know there's got to be more questions. David, you can keep firing away questions if no one else is going to ask them.
Did you put your sales commissions in COGS?
I put ours in admin because COGS to me is how much it costs to actually go out and execute the job, not to go out and sell it. And so salespeople end up in two places in my mind. They either end up in administrative, which I view admin as all the labor that's not out producing a job. They might be creating the revenue, but they're not physically producing it. And I use COGS to hold my production manager accountable to the cost of executing the work. But my production manager doesn't oversee my salesperson. So I put the salesperson in admin. But if that salesperson is like lead generating, like they're a hunter and not just a farmer, because so many times we call them salespeople, but they're really just estimate specialists. Like we as the business owner get the lead and then we just hand it off to our salesperson, but it's like they're not selling anything. They're just explaining our process and getting a yes or a no. Then they're for sure admin to me. If they're out there, so like in our high rise business, we have a dude that's just literally going out and he's getting the contact at every single building and he's building the relationships, and it's going to take him years to close some of those, right? But like that's sales. He's displacing marketing. Therefore, to me, he's in like sales and marketing. Like that goes into like a separate bucket of he's creating the leads. And then it would be sales and marketing, and admin would be like the taking care of the leads after they're already in. He doesn't even close them. He just goes and gets the relationship. Like he's literally the marketing department. But he's so willy-nilly and he's such a wild card. We don't let him do the full quote. We just need him to get the relationships and get the foot in the door, and then we'll quote it afterwards. So I think it just kind of depends on what they're doing, but I generally wouldn't have them in cost of goods sold just because they're not my production manager's responsibility. I'd either have them in admin or in sales and marketing, depending on what their role is.
That question just varies the answer on whoever you're talking to sometimes, you know.
Mm-hmm. Yeah, we do have one bookkeeping client that was like adamant that we put their territory managers in COGS because he views it as if we did this job, we're paying them 10% or whatever it is. And so I get that logic where it's like, yeah, if you can point to Mrs. Jones's job and say, in order to do that job, it costs me this. I mean, that's kind of the logic he's using. And if that's the whole point of bookkeeping is to help you make decisions, right? And so depending on how your brain works and who you're holding accountable to running that department, that's going to dictate how you make those decisions. And so you might, in his case, you might choose to put your salespeople there just because either who they report to, or you view it as like, that's a guaranteed cost every time we book a job. Now, I think he might change. I don't put him there because most of our clients are repeats. They're not new clients. So we don't have to pay a salesperson when somebody calls. Only for like 20% of the work on our schedule do we really end up paying a salesperson, or maybe 30%. And therefore it's like, I can't point to Mrs. Jones's job and say it cost us this to go do that job, because there's a good chance the salesperson had nothing to do with it. We're not paying them commission because it's a client that's gotten our windows cleaned for 20 years now.
You were talking about your production manager a couple of minutes ago, where you hold them accountable. You know, with mine, I have KPIs of, you know, that they get bonused on is do they keep labor in check? Do they keep chemicals in check and gasoline in check? Those are the main three.
Mm-hmm.
What ones do you check, and how do you bonus them out with you, or do you?
You nailed it. We have a cost of goods sold target every month. We're looking at budget versus actual. I send it to them every single week for COGS, and it's labor and it's fuel and supplies and chemicals. I add, this is another like nuanced one where it's like, well, could it go here? Could it go there? So we put workers' comp in there because it's so purely safety driven. I put damages and repairs in there because if we screw something up on a job and need to pay for somebody's plants or whatever.
Right.
And then I put merchant processing in there because that is a decision we need to make every job. And I give them a threshold of, if a job is under $1,000, check or credit card, whatever. But if it's over $1,000, you can never accept a credit card. I don't want to pay $30 to get that $1,000, right? I will pay you to go to the bank. And so it is something the people in the field need to be responsible for, is how we get paid. And I can look at Mrs. Jones's job and say, I did that job. And part of doing that job is I do want to get paid for it. And we do need to decide, should we take a check or should we take a credit card? Every job. And so if it's a small job, yeah, credit card, go. But if it's a bigger job, we should probably take a check.
We just added 3% to everything and just bake it in. If they pay you check or cash or something, it's just a bonus. But
yep. And it's funny because we kind of did that too a while ago, but now it's just like, it's so baked in that we're like, should we add a 3% service fee? Like it became a price increase. And now we debate if we should like add a 3% service fee on for people that pay with credit card. I feel like it's one of those things where it just keeps recurring. And you're like, yeah, let's add a 3% fee on for people that pay with the credit card. And then let's just group everybody in there.
We'll flip it and use it as a sales tool. If they're a little balking at price, well, you can pay us with a check or with a check or cash, and you can save 3%.
There you go. Built-in discount.
I have a question.
What's up, T?
Hey, how are ya?
Doing
so,
good.
For like, let's say you sell a vehicle, or if you sell equipment, or you get that tax credit, that ERC, where do you put that in the bookkeeping?
I'll do the tax credit thing first. So the tax credit thing is something your CPA should probably handle, because it's actually like a journal entry back in 2020 or 2021 in the quarter, right? There's like 8 quarters that apply, and there's only 7 quarters maybe that apply in that ERC credit thing. And so the journal entry should actually go back in that year, and then they need to go redo your taxes for that year. And then you probably have you get the ERC money, but then you got to pay a bunch back to the government. It's so funny. It's like, hey, government, or, yeah, give me a bunch of money. And then they're like, okay, give me a bunch of that back. Like, why did you just not withhold the taxes right from the beginning and give me the net amount instead of me having to freaking pay taxes back after the fact? But anyway, so that's how the ERC works. Whenever you sell a vehicle or an asset, or it'll even happen if like something gets wrecked, right? And you got an insurance claim. This is actually the hardest thing to train for our bookkeepers, because like now there's a lot of moving parts. The first thing is how much of it was already depreciated. So people get caught in this trap, which is they'll buy an expensive vehicle. Let's say somebody buys a $50,000 truck. Today you can depreciate that truck 100%. Right off the bat. So if you buy it in 2023, you can expense that entire truck in 2023, $50,000. Now on your books, that truck is worth $0. You fully expensed it. Historically, a vehicle you would expense over 5 years, and there's a government schedule for it, but figure 20% a year roughly. And so therefore, if you sold it in year 2 or 3, it would only be depreciated, a portion. But if that thing is fully depreciated, and let's say you sell it, it's 1 year old, you bought it for 50 grand and you fully depreciated it, and now you sell it for 45,000, you have a taxable gain of $45,000. because it's worth $0 and you were able to get 45,000 for it. And so I've seen some people be like, holy shit, I got this huge tax bill because I sold a vehicle, right? And so if it's a vehicle or an asset sale, you got to look at how much it's worth, like bookkeeping wise on the books, how much of it has been depreciated. And then anything you sell it for on top of that, you may have a gain on. Or if you bought it and let's say you got in an accident with it and you got an insurance claim, so maybe you got a gain on that insurance claim, but now you're able to sell it for something else, like it might still not be fully depreciated, and so you might have a loss on the sale of it. So there's like these moving parts where you got to figure out the differences between them. You don't need to worry about it because you have a sweet ass bookkeeping company. You just need to let your bookkeeper know what happened.
I
Good
thought
to know.
what you were suggesting is depreciate it all and then sell it for cash and don't tell anyone.
Hey, I'm not here to like make suggestions. I'm just here to tell you what happens depending on what you decide to do.
Oh, I thought you did creative accounting.
That's an oxymoron. That's an oxymoron, Dave. Accountants and creativity, they don't go together.
We're going to do a quick logistics before the next question so we can give away the flight. So
Ooh.
I know you're all going to be, or Dan gets to pick a number. So I don't know how many people we have on. Shine, you're on here. If you can list everyone's name that's on and write a number beside their name, except for Andy and I. Write everyone down. Thank you. And then Dan, at the end of the show, you'll pick a number.
Oh yeah, I've got a number.
Okay. And we'll give away the flight. So who has the next question for Dan?
Hey, Dan.
What's going on, Antonio?
What's going on, brother? You doing all right?
I made it home safe, so
hey, man,
that's a win.
that was a great
win.
Really enjoyed meeting you, and this past week, everything went well, man. I really do.
Appreciate it.
Hey, brother, just got a quick question for you, man. In reference to the truck fleets, how every often would you recommend upgrading or just changing them out just to keep intact? Because versus just waiting until they give out, and then you have to break your head sometimes just to get a backup vehicle, just to pre-plan, pre-budget. However often would you recommend upgrading your vehicles?
I think it depends how fast you're growing. So we like upgrade. We're constantly buying new vehicles, probably a couple a year.
Okay.
And we're like phasing out the oldest ones. But I mean, like we'll keep them around when they're worth like $2,000, right? It's like, yeah, let's just park that thing. It's worth nothing. We can't sell it for anything. But if we get in a pinch where something breaks down, this thing still runs, right? It ain't gonna be pretty. Nobody's gonna love it. It rattles, it's loud, it's annoying, it smells like exhaust the whole time you're driving it. But if we get in a pinch, that thing's going out. And so I think as you're getting new vehicles, I mean, it depends where you are from a scaling perspective, right? Yeah, we have 15. So of course we're just gonna go get a newish one. We usually buy them used like by a couple of years. If it's your second or third rig, then you're just kind of like bootstrapping it. It's like, yeah, do I want, am I going to be the one driving it, or is it going to be a 20-year-old kid driving it? What does it need to do? And I can't afford to have a bunch of backup vehicles. And so therefore I need this one to be pretty damn new so that it's reliable. Right.
I understand.
And so I think the need of it comes to a little bit of that. As you get a bigger and bigger fleet, then like you kind of want that spread between some new ones and some old ones, like I was talking about earlier, because you're going to hire a dude with a shitty driving record and your insurance companies will say, nope, he can't go out. And you'll be like, well, that sucks because our customers actually live over there. They don't come to us. We got to go to them.
Yeah, we got to go. Yeah.
But like this dude can work. And so how do I get him over there? I can't like pay a driver to haul him around. Like he's got to be able to drive my stuff. And then that's when they get the really old shitty van with the,
just to start them off.
Yeah.
You work their way up towards that.
Yeah.
Okay. Sounds good. Thank you, Dan.
Heck yeah.
A lot of people don't understand depreciation. Give us the short elevator version of how you explain depreciation.
Ooh, I like that one. So in general, when you buy something for the vehicle, it just gets expensed. Or not the vehicle, for the business. When you buy something for the business, it just gets expensed. It goes right to your profit and loss as an expense. And so it's revenue minus expenses equals your profit, right? But when you buy something over $2,500, I think that's still the threshold. When it's over $2,500, it becomes an asset. And an asset, you can't just expense right away. The government says, hey, that thing has a useful life of longer than a year. It's not just a gallon of bleach. It's not just a weed whipper. It's a piece of equipment. It's a trailer. It's a mower. It's a pressure washing machine that is meant to last for multiple years. And so instead of allowing you to expense it right away and put it on the profit and loss, they say you own that. Like that's a piece of equipment and it goes on your balance sheet. And balance sheet is a goofy term for net worth, right? You can think of this in your personal life. If somebody said, what's your net worth? You're not going to go through your fridge and start adding up how much money you have in apples and oranges in there, or in my case, Busch Lights. Like you don't think of that stuff as assets, right? It's disposable stuff that you're going to use. The same thing in your business, right? Your squeegee rubbers, your pressure washing gun, stuff like that. You don't think of an asset. It's just like a disposable part that you're going to use for a period of time and then you're going to scrap it. But maybe the pressure washer itself or the trailer or the truck, you'd be like, well, I own that shit. Like that's a lot of stuff. And your business is the same way. Your business like owns all these things. And so they go on the balance sheet as an asset. And now you might owe some money against them, right? Because like I told you earlier, you should finance your stuff. And so you might owe some money against them. And then that's a liability. And so you would look at your business in terms of your net worth of like, here's the things that you own, the money in your bank account, your accounts receivable, that truck, that rig, that this. And then here's all the shit you owe. Well, I got a loan for the truck and I got a loan for the trailer and I got a loan for the equipment and maybe a line of credit and a credit card. So you got all the money you owe and the net amount of that is your equity, right? So now when it comes to tax time, the IRS is going to say, hey, yeah, you own all those assets. You bought them all. You got that $50,000 truck, but you're going to use it up over time. So it's not that none of it gets to be expensed. Just because it's an asset doesn't mean it sits on your balance sheet and that truck is worth $50,000 forever. Like obviously it's going to go down in value and it's going to get used up and eventually it's going to be expired. All equipment is going to be that way. And so they allow you to depreciate it as a means of expensing it so that it eventually hits the profit and loss and you eventually get the tax break of it. Now, it used to be kind of like pre-Trump, it was vehicles were usually a 5-year depreciation. Equipment was usually a 3-year depreciation. Office stuff has a different depreciation schedule. Buildings have like a 15 or 20-year depreciation schedule. I think Goodwill has a 15-year. So if you buy like a client list, you even depreciate that over 15 years. So everything's expensable. It's just an asset that slowly gets expensed. And that's that expense that you get to take on that asset year after year after year is what your depreciation is. Now, the weird thing that Trump did is he said for all these small businesses, and like small meaning like less than 100 million, like pretty big businesses, but would include us as well. He said, oh, if you buy an asset and you spend less than like a couple $1,000,000 a year, I think, on these assets, you get to expense all of them in year one. And it's called the 179 deduction, where now when you buy a truck or a trailer or whatever piece of equipment, you get to expense it all right away instead of having to draw it out over 5 years. So you get a big tax break on the year that you buy it. But like I said, I've seen guys get in a weird pinch where all of a sudden they did that, they fully expensed it, and then they sold it the next year. And they're like, I had no idea. Like I'm gonna owe like 20 grand in taxes from selling this thing. And it's like, well, on the plus side, you saved 20 grand in taxes last year from buying it. You just didn't hang on to that 20 grand. You went and spent it, and now you owe it back to the government because you fully depreciated something that still had a lot of value. You should have went and talked to Nick. He would have told you how to sell that thing cash so you didn't have to claim it.
The other thing to go along with it is a lot of the counties where we're at anyhow, you got to pay personal property tax on your equipment. And when it comes off when you get rid of something, if you don't tell them you got rid of it, you're going to keep paying taxes on it. So make sure you go through that every year and take that stuff off your county's list of stuff you're taxed on.
That's a good point.
All right. Well, I can't believe that hour went fast. It always does with you, Dan.
I was going to say, I'm not surprised. I
just looked up. I'm like, oh, we have a time for a few more questions. No, we don't. So thank you for joining us. We're going to have you back on so we can do the purgatory. Because like I said, I absolutely love that talk. So when Dan comes back on, don't miss that one as well. And you can get more of Dan every week. Dan has a show 3 o'clock Central on Wednesdays every week, right after this. It's 30 minutes right after that. Dave is usually on that with us too. So Dave and I join Dan on that most weeks. And it's all kinds of things, bookkeeping and stories. So you should check that out. It's in Dan's Facebook group. Somebody could post that in the chat too. I'm bad at posting things.
I mean, Dave abandoned you today. So, I mean, it's hard to do all the things when you.
And it's hard to do all the things yourself. Yeah. And now I learned I should have music for this show. I love dancing to the music in your show and my show. So next week, guys, we'll have some music. All right. Are you guys ready for the giveaway, which I also should have had drum roll music for coming up in the upcoming weeks?
Here we go.
Okay, Dan, number between 1 and 14.
Yeah, 3. Definitely number 3.
Nick Thurston.
Oh, never mind. I changed my mind. Can we go with anything else?
I was not expecting that.
Hey, you get a flight to Phoenix for the event.
I love you, Dan.
Yeah.
Are you making Dan buy it?
So congratulations. No, we're not making Dan buy it. That was last week when we did somebody volunteered me to give away the 50,000. Like, no. Anyway, so congratulations on the free flight. We will surprise you each week with different giveaways when you're on live. Remember all the ways that you can get points. Keep sharing it on social media, commenting on Collaborate Live.
Let's give some more stuff away. Dave's not here. Let's let it up. Let's fire away. What else of Dave's can we give away?
No, I'm gonna have.
I like your thinking, Dan. Let's go.
Yeah. He invited us on his platform, and he's not here. We get to give his shit away. I know exactly how this works.
I'm the one that'll have to figure out the plan. So
that's true.
No, I'm cutting that off. But we should have the announcement, more details by next week about the event. We are doing October. The middle of October. So we'll have the venue and things and more details finalized. So stay tuned for that as well. Don't forget to fill out the form. It's in the chat. And thank you, Nick. A few people posted the leaderboard.
I did drop the link for bookkeeping beer and BS in the chat. So you guys can all tune in.
So if you want some more of us in 30 more minutes, you can have some more Dan. All right. Thank you guys. Have a great week.
Bye, guys.
Angela.
Excited. Is it possible to get the link for the form one more time? It's not in my chat.
Yes, it is.
Awesome.
Maybe. Who can see? I just have to find that I'm talking to everyone in the meeting. There we go.
I believe in you. You got this.
There you go.
There it is. Perfect. Thank you.
Congratulations.
That's amazing. I've never won anything in my life.
Right? That's pretty exciting.
That's so cool.
Free flights. This is going to be a fun few months, just surprising people giving stuff away all the time. So
let's just make sure it's First Class United, not Spirit Airlines or something.
You did not give that distinction. You take that one up with Dave.
Yeah, I'll figure it out.
Okay. Have a great week, you guys.
You too. Thanks, Angela.